bears hibernate longer than they attack. If we're looking at this stat, I actually had came up with a stat for that. Since 1949, the U.S. stock market has faced 11 bear markets, Jose, right? With its average drop of 33%. By far, but far more powerful bull runs gain an average of 400+%. Drawdowns do happen, but expansion often outweighs the crashes, right? And so when we look at that, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of them. And from them, if you look at the upside compared to them, look at those returns from them. Now, the longest one was the earliest one in that 1929 era that lasted a long time, from 1929 to 1949. That was a 20-something year bear market. You know what I'm saying? Imagine that. That was the Great Depression. And I've always said something, they often get shorter in the recovery time. Not saying it's right or wrong, but you know, the market finds a way to bounce back faster. And the crazy part about it is, like, you can feel like you're in it for a long time. But if we think about it, like, if we can endure, the only hard thing is, like, if you're in an option play or something, because then it kind of go against you, and you got to, you know, play the other side of it. You kind of don't want to go against your plays. But if you just on some buy and hold, like, yo, like, you can make like, you supposed to be, like, I know I bought more NVIDIA at $83. I didn't get in the option plays, but I bought more of it. And so I've always said you make more money in a drought. And I think that was a great opportunity for us. I think the only thing that kind of gets me is I hear a lot of people saying, like, the market is overvalued. And I'm not saying that they're wrong, but the market is, in most cases, the market is going to be overvalued more than it is undervalued, because the market is a forward-looking mechanism. You feel what I'm saying? On the flip side of that, what we're going to have to worry about is when these earnings come out, investors are on the other side of tariffs, and they start giving earnings and they start giving guidance. I'm interested to see what that's going to look like. So let's go a little further. Is the market ready to run? And based on this, the S&P 500 is plus 20% in the last 2 months. This is a good signal for the next year. Why? Because in most cases, after the market comes from a 20% drawdown, it goes crazy after that. Mind you, we was down really heavy. So look at it. 2-month return. After coming from a drawdown like we've come down, the 2-month return in 1 month is 8%. In 1975, then 14%, then in 12 months, 27%. The closest was 23%, and then in 2020, and then in 1 month we had 5%, in 3 months we had 14.5%, and in 12 months we had 39.7%. The average 1 month return is 8.2%, 8.2%. The average 3-month return is 12.5%. And the average 12-month return is 30%. All after a 2-month time frame was positive 1, 3, and 12 months after.
I don't think, even if, like, with everything, because, again, we need Trump to do the deals. So even through all of that, like, you know, political turmoil and stuff like that, I think even if the numbers are still skewed, like, maybe, let's say, for example, we get like 4%, 5%, 3%, and then 12%, and then like 20-something%. Like, I'm still not mad at that, though, even with everything going on. I think we might be able to statistically still do that, though.
Might statistically still be good?
Yeah.
I like it. Let's go further. Year to date, leaders of the rally. Technology, 34%. Shout out to Steve, this is a dope graphic. Think about that, bro. Technology, 34%. Consumer services, communication services, 26%. Industrials, I keep throwing them industrials, bro. I'm telling you, bro. That's why waste management pissing me off. You know what I'm saying? Syntax. I had a Syntax, but I should have stayed in that bitch. That bitch at all-time high right now. And it's off the April 8 closing. So technology, communication services, industrials, and discretionary. This who's leading the rally moving forward. All I do is tell Steve the picture I want, and he go get it, dog. I tell my dog the picture I want, he go get it, you hear me? Dow Jones is 5% off a year off a high. S&P 2% off a high. NASDAQ 2.7% off a high. Bruh, that is interesting. That's really one day worth of work. One good day. If you come out tomorrow, they come out tomorrow and say China and U.S. has made a deal, that's done. That's wiped out. They come out tomorrow and say U.S. China made a deal, that's wiped out. Whew. Now I will say this. We hit all-time highs. I gotta take some off the table. For sure. I don't mind being 2%, 1%. You know what I'm saying? You hit all-time highs, you gotta take some off the table.
Why are you taking some off the table particularly?
Huh?
Like, obviously it's at all-time high, so you're taking some off to take profit, but you said it like kind of like I definitely gotta take profit. Like,
For sure.
Yeah, so why is that?
I don't like being in nothing when it hit all-time high.
Okay.
What happens is there's gonna be a reason it pushes up, but then psychologically you just understand the market is gonna say, hey, let's take some profit from it.
Yep.
Like, cause there's always that's the psychological part of the game, right? Like, it can have no reason to pull back other than it's just in no man's land, right? And so when it gets in no man's land, for me, you know, that's what, I'm gonna be honest with you, the Palantir play, what I should have done, just thinking back on it, I understood that it do that, but I should have let it hit the no man's land, let it pull all the way back down and got back in it on my second entry, because once a stock hits no man's land, bro, like, it's creating up. So I always say this, think about every stock like this. Every candle on the stock's chart becomes a part of its DNA. If it has no DNA, it has to create it. And so while it's creating the DNA, it's giving us a blueprint on what it can go back to, where it came from, those type of things. So for me, I'm like, all right, let me let it create the DNA, and then now I have a way to feel my way around. Yep.
So what's the difference between, for example, like NVIDIA? Like, you was crushing that junk, like just going crazy. That thing was just creating all-time highs every day, every week, and that thing just kept running. What's the difference between NVIDIA creating all-time highs over and over again versus like Palantir and...
We was getting it off the bounce every time. I was buying 100 and 150 contracts at a time. So it'll hit all-time high, boom, I'll take some off the top. It'll run up, I'll still have a position in it, but when it came back down to that DNA, when it came back down to the DNA that it created, I'll get in another play. And then remember, basketballs bounce, donuts fall flat. It'll bounce, because that's what a good company does. It'll create a new high, people will take some off the top, it'll fall back down, and a lot of times NVIDIA will do that overnight. So we'll wake up in the morning, it's up $25. You're like, whoa. One day we woke up, bro, the stock was up $89. I say, what the hell? We woke up one morning, bro, the stock was up $89. I said, this is crazy. You know what I'm saying? So that's what we was doing. We was taking it, like, again, I was getting 100, 150 shares, 200 shares. My $1 million play, I had 450 contracts in that $1 million play. You know what I'm saying? So, no, I had 425 contracts. So it once it runs up, man, I take some off the table, it'll bounce back down, bounce down, I'll get another position. I had 5 of them jokers in that play at one time. It was just going crazy. So that's what I mean. Like, I don't mean I gotta empty the clip, but I definitely gotta take some off the table. And if it's a new position, I could just wait. But it had to hit that thing 3 times. And just the record shows that if it can hit it 3 times, the 4th time, it'll pop up out of it. You know what I'm saying? So it just didn't pop up out of it. And so, yeah. But normally I like to just, even with Spotify, I did that. Like, if it was just me taking 1 off the table, 1 or 2, like, I'm gonna take that because I know it's gonna come down. But what a great company does is, we say it again, it'll come bounce, it'll come back to that base and bounce back up because it just wanna keep bouncing high. Remember, the the lower high, the higher low gives the higher high a step to bounce off.